Some of them are. I would say the way to think about our company is we are in two primary businesses. We're in LNG transportation, that is kind of long term. We have 10-year contracts, about $10 billion of forward fixed revenues. That's very stable. So that's kind of a floating LNG pipeline. From time to time, we do store gas there, but most of the time we transport it. And on the oil business, which is a business we've been in since 1973, so we've seen quite a few economic oil and tanker cycles over the years. What we're doing there is essentially also being floating pipelines, and from time to time, when we have situations like we're having now, where there's more oil than produced than what's being consumed, then we're seeing tankers being used for storage. But it's a bit more of a nuanced picture, I would say, because already in the fourth quarter, we saw that our rates were very strong. We saw earnings very high in historical terms,
right.
And it's just continued up.
It's continued up?
Yes. So first quarter is going to be stronger than fourth quarter, and second quarter looks even stronger for us and for most tanker companies, I would say.
Why is that? Because fundamentally, you're still moving crude around that people that have no demand for today. So are you simply just moving around the backlog of production and trying to figure out where to put it?
Yeah, so if you think about it, right, I mean, there are three types of crude oil tankers that the world is looking at. VLCCs that can carry 2 million barrels. There is Suezmaxes that carry 1 million and Aframaxes that carry 700,000 barrels. We are focused on the Suezmaxes and Aframaxes. And basically the way the market works is supply of ships versus the demand for those very ships. And what we have seen over the past couple of years is that we were probably sitting at 80% utilization of those vessels. When we got into Q4, we saw it come up to 85, 86%. And what you're seeing now, because more and more of our customers are using our tankers for storage, is that utilization is coming up, and that's driving up rates.
So if anything, you guys have to be worried about what happens once the market normalizes and once they're no longer trying to turn ships into storage vessels, but just use it to transport things more generally. It's a nice position to be in. Very few companies, other than maybe those that sell toilet paper, could enjoy that benefit right now.
That's true. And just to give you a sense of the magnitude of this market, right? In fourth quarter, Teekay Tankers, which is our tanker business, generated annualized free cash flow of $400 million. Based on today's rates, we just booked a couple of tankers at $100,000 a day. We're generating closer to $800 million of free cash flow. And if you look at the market cap of TNK, that's about $800 million. We have just over $800 million of debt at the end of the year. So this is the kind of market and the reason why people become ship owners.
Yeah, the bear market for oil is a bull market for the tankers right now. Kenneth, thanks for joining us to explain.